Let's talk about it all with Mike Zudzil. He is a senior portfolio manager at PIMCO. Mike, pleasure to get you on the show. The market, vis-a-vis the CME, Fed funds, futures, et cetera, pricing in basically 100% chance of a rate cut at the September meeting. Are you at 100%?
Yeah, thanks for having me, Brian, and pleasure to be here. We do think recalibration 2.0 starts again in September. The Fed most likely, resumes cutting rates. Most likely 25 basis points. The data will dictate just, kind of how far and at the pace at which they go. But the inflation data was sort of as expected and didn't really give the Fed any new information they didn't already have. The new information was the unemployment report we got last week, and that certainly gave us all a bit of new information as it relates to the velocity of the labor market and number of jobs that we've put together the last couple of months. So given how much the labor market has slowed from what was just reported, and the fact that inflation is moving, but the pass-through from tariffs hasn't been as onerous as some might have thought, yeah, we do think the Fed does get underway. That recalibration that was hibernating comes out of hibernation, and they begin cutting in September again.
Are they behind the curve already, Mike?
I think that depends on who you talk to. I think there's a couple camps at the Fed. I think there's one who believes they should have gone already. Obviously, we had 2 dissents from Board of Governors, the most since 1993. So yeah, there's a camp that believes maybe we're a bit late. Maybe some other folks might use the term late as well. And then there's others who believe that, the economy is still fairly resilient, and inflation still well above target, and still, a pace, a slow adjustment lower makes the most sense. I think the proof will be in the details in the coming months, whether or not the Fed is behind, whether they need to go faster, or whether or not, some pace of quarterly adjustments or slower makes more sense.
Well, you are a member of the PIMCO Investment Committee. I don't know if you guys meet at like Gulfstream at Fashion Island across the way. Who knows? It's a Newport Beach joke.
Come join us. Yeah.
So, yeah, I'm happy to come out there. Trust me, anytime, Mike. So what does the investment committee think? Then where do we make opportunities in the bond market when you've got a 10-year, which, let's be frank, has not moved in a year?
It is not. We're right at the 1-year average, 4.30 10-year note. Right at the 2-year average, 4.30 10-year note. And we settled in a pretty narrow range in yields. But look, starting yields are a good indicator of returns in fixed income. Year to date, the ag's up about 5%. With active management, you're up more than that in fixed income today. So you don't really have to do a whole lot. Yields don't have to move in order for you to make a decent return in fixed income. And so, we like owning fixed income, relative to risky assets. There's a good return on offer. And then, if the economy does do things that are unexpected, you're going to get the Fed to respond probably very forcefully, certainly more than markets are priced. And you can get, yourself in a situation where you have fixed income up double digits pretty quickly. So, yeah, the yields on offer make a lot of sense just to sit and wait and clip your coupon. And there's obviously that tail scenario where fixed income does quite well when the rest of your portfolio may not be doing so well.
Yeah, it's been an interesting year. We had a couple weeks there in April where yields fell down, but overall, pretty much back to where we were 1 year ago. Mike Zudzil of PIMCO. Glad to have you on the program. Welcome back anytime, Mike. Thank you very much.